John Arnold.
Peter McCormick.
How you doing?
Doing great.
Welcome to What Bitcoin Did, brother. Nice to meet you.
Yep, you too. Great to be here.
You come under strong recommendation.
I hope I can live up to those recommendations.
The world has been saying we need to talk to you.
Many people are saying.
Well, Grant said.
Harry said.
They're like, you got to talk to John, man.
That counts as many people.
Well, they're two of the most important people in Bitcoin.
For sure.
So when Harry recommends somebody, it's like an instant in. All right. For people who don't know you, it gives you background.
Yeah. Essentially, random pleb that comes from a traditional finance investing background, was gold bug through high school and early college. Unfortunately, that did not lead me to fully understand Bitcoin, and in fact, turned me off of Bitcoin for a while. Unfortunately, many such cases. But started paying attention a little bit in 2017, like most people with the run up. Kind of lost interest after the crash. And finally was pulled in to really do meaningful work on it in spring 2020 for obvious reasons. And after 2 weeks of actual intense study, it all clicked for me. And so from there, I was just down the rabbit hole and continued working in my traditional finance job. I was working at a hedge fund at the time, just for stacking sats, mining fiat, stacking sats, and did that for about a year, and was kind of having the instinct over time that there was a lot of opportunity to invest in companies that were exclusively focused on building on Bitcoin. I was seeing a ton of capital flowing into kind of crypto more broadly, and very little of that going into actual Bitcoin companies. And so was starting to look for a way to kind of express that theme. And right around that time, 1031 popped onto my radar. I slid into their DMs and just kind of wouldn't let up until they met up with me.
Love that.
Yep. We met for the first time at a Nashville meetup in late 2021. And I started just kind of working with them on the side, as I had free time, writing investment memos, helping them with diligence and stuff. And did that for 6 months, and then was able to come on full time in May of 22, the day that Terra Luna blew up. So
love that, man. How are you a gold bug in high school?
The financial crisis happened when I was in 10th grade, and
What's 10th grade? How old?
15, 16.
Yeah. So how as a 15, 16-year-old do you end up caring?
My parents are CNBC addicts basically.
Okay.
So that was just on in my house all the time. So I was like, well, what's going on here? Why suddenly are all the banks blowing up and maybe the economy is, in a tailspin out of nowhere? What's happening? So that sent me down the kind of the Federal Reserve rabbit hole and just understanding kind of central banking and money printing. And then, that led me to the Ron Paul train. Obviously, Ron's been big advocate of gold his whole political career. So that was kind of how I landed there. And then, you'd think that would lend itself to understanding Bitcoin fairly quickly, once it was, shown to you. But
it hasn't for Peter Schiff.
It hasn't for Peter Schiff, and it didn't for me. So unfortunately, so much to my wallet's chagrin.
But were you stacking atoms?
Yeah, exactly. Yes.
That's so funny at 15, 16 getting into that hardcore. Because even though it's on in the background, right? It's I was skateboarding.
I cared about girls and football.
Yeah, skateboarding and scrapping. Yeah.
Are girls not into talking about the Federal Reserve?
I've not met one that is.
You tell me. What's your Tinder game like? Do you like Federal Reserve, hater?
Yeah. My wife puts up with it. I'm not sure she's really into it, but she'll listen to me rant. So
she a Bitcoiner yet?
In spirit, yeah, yeah. She'll come to me, even before I got into Bitcoin, she would kind of come to me. We've been together forever, and she'd just come to me once a year and be like, "Hey, do you know the banks don't actually have our money?" And I was like, "Yeah. That's a problem, right?" And so she gets it, even if she doesn't, want to spend too much time kind of thinking about the technical solution to it.
What did you study at college?
Economics and finance.
Okay, Keynesian economics.
Oh yeah, I mean, I was big into Austrian economics at the time, so all of that was just in one ear out the other. I did what I needed to do to pass the test or whatever, but it was I was aware that it was garbage kind of the whole time. So you do what you need to do to get through, but yeah, most economics departments in the country are completely corrupted by that thinking, unfortunately.
I always find that interesting if somebody's gone in to study economics, being a proponent of Austrian economics and under maybe being a gold bug, because I did economics at A level. I had no idea. I was like a fresh blank sheet of paper for them to imprint Keynesian economics on.
Yeah.
And so not that I really remember much of it because I was 17, 18 years old, but you go into that room and you're being taught as fact. And so you accept it. It's like learning 2 + 2 is 4. It's learning Keynesian economics is the way. For you going in, did you not find yourself wanting to argue and debate with your professor? Oh, and did you?
Yeah. It fell on deaf ears, but and when you're in class sizes of like 100, that's not really the forum for that anyway. But
you're the weirdo banana.
Yeah, exactly. And everyone else just wishes that like you would shut up so we could like get out of class, basically, right? But yeah, no, I mean, I think when I came into college, I was expecting or hoping that maybe like Keynesianism was like I knew kind of dominated most like academic economics departments, but I hoped maybe there would be some pockets of resistance to that. But it really, unfortunately, isn't the case, except at maybe a few universities in the US and Europe. But my goal was to get into like a traditional finance job. So like an economics / like finance degree was like just the most logical kind of way to do that at the time. So you just take your medicine and shut up and recruit for the jobs that you want.
Well, if you're going into a Tradfi job, if you're going to work for a hedge fund, do you kind of need to understand Keynesian economics? Do they function better under a Keynesian model? Or could they function better under an Austrian model within a Keynesian system? Does the question make sense?
Yeah, I think so. I think you need to understand that that's the way that many or most of the people that you're kind of like trading against think. And so there's this whole like, game on top of a game on top of a game in like, trading like in a hedge fund world where there's like the fundamentals of like a particular company, which are affected in some way by like macroeconomic policy. And there's like, then there's the reality of what's going to happen. Then there's what all your peers on Wall Street are going to think about that. Then there's on top of that, like how much of that is already priced in and how much do people like that you're trading against like already think that it's priced in. And so you can get like 10 derivatives up of like, just like trading on like fantasies that everyone else is having and trading against those things. So it's like, and I think that's a symptom of like late stage fiat, basically, where most investors are completely divorced from like accountability to like the fundamentals of what a company is actually doing. And increasingly like companies are just because like people are using the S&P or the stock market as essentially a savings account, valuations are bloated. They're kind of disconnected from anything that's actually that the business is actually doing, or at least like mostly disconnected. And so much of what's driving a stock in any like, day or week or month is more related to just like liquidity flows and then how people are positioned already. Like if a stock is already like highly shorted, or if it's like, highly owned, like that will drive price action much more so than like a quarterly update a lot of the time, like a quarterly fundamental update that the company's giving. So, you kind of need, if you're going to be in that world, like all this is to say, like you need to be prepared to kind of play the fantasy game and like realize that's kind of what you're getting into. And some people are better at that than others. It's, one of the things that probably frustrated me a bit about that whole world.
I was going to say, were you getting disillusioned with it?
Yeah, for sure. And that's one of the things that ultimately I think kind of primed me to take Bitcoin seriously again when it came back on my radar in a real way in spring 2020.
So when it did come back, what clicked the second time?
Part of it's just like spending the time when you're like, working like a 60, 70, 80 hour a week, like high stress, like fiat job, where you always have to be on, like you just don't have that much bandwidth outside of work to like focus on anything else. You want to think about anything but like investing and, money and positioning your portfolio, right? So part of it's just like being forced to like sit down and do the work and, read like a book or two. Ultimately, I think like it was Gradually Then Suddenly by Parker Lewis, who's an advisor at 1031.
Amazing.
And Bitcoin Standard. Like it's, I'm sure a lot of people say that, but like kind of sitting down and thinking through like what actually is like the origin of money, like why did gold monetize and become money? What were its limitations that led it to failing ultimately to do, what it promised to do and what a lot of gold advocates kind of want it to do. And can Bitcoin, solve those limitations? And I think the final like piece is just understanding like, yes, it can solve those limitations and delving into the technical reasons, like why that's the case and why that's, there's a credible set of reasons to believe that's the case, like durably over time.
And then you're in.
Yeah.
You're sold.
Yeah.
And that flip from TradFi to 1031, Does the pace change because it's a Bitcoin company? Is it like a mirror? In that you're working 60, 70-hour weeks, stressed, having to hammer through at a Tradfi company. You go to a Bitcoin fund, and the fund itself reflects Bitcoin itself in that the time, the time you have to spend on it and think about things kind of slows. You may still work 60, 70 hours because you love doing it.
Right.
But is it a different kind of, does it go from like pressure to fun? Does the time preference come into the fund itself?
Yeah, absolutely. I think to some extent that would be true of like moving from a hedge fund to like any venture fund where, there's really no liquidity or like, exit events are like 3, 5, 7, 10 years in the making. Right. So you have to, at least theoretically, you have to have a lower time preference and you have to have a much longer kind of time horizon. That kind of got distorted over the last like few years, especially in like crypto VC where you could kind of, arrange an ICO or a pump and dump scheme and kind of get liquidity in 6 months. Right. And that was why, those projects were often so attractive to like traditional VCs because they could pull forward their exits so quickly. But if you're really gonna, take like a longer term view, which I think you should, and any healthy like venture fund, is doing, like, yeah, the time preference, extends and slows down, and you have a little more space to kind of really try to reason intelligently about like what does the 2 to 5 year like horizon look like for a company, which you're doing like theoretically in like the hedge fund world. Like you're building like a DCF model and projecting forward like the next 10 years of cash flows to get like some kind of benchmark for like where the stock like should trade. But that's like, one small data point that you often just kind of ignore based on like how things are actually trading on like a week to week basis. So you're just, like I said, so much of it is about like optimizing for like positioning against everyone else and optimizing around like the currently popular narrative about a stock more so than really caring and trying to forecast like what a business's real prospects are over like a meaningful amount of time.
When you look at the crypto VCs, are they almost even ironically more late stage fiat than the Tradfi traditional hedge funds?
Oh, for sure.
Are they like the final boss of this bullshit?
I mean, it's like speed running all of the worst mistakes of like the fiat system, right? Like reinventing, fractionally reserved banking with a lot of the companies that have blown up over the last like couple of years, very, very famously and publicly, and just having your massive blow up instead of it taking like 20, 30 years to kind of for the rot to build up and set in, it takes like 2 years, right? So a lot of the same leverage games are being played that are being played in the traditional finance system in like kind of these VC backed crypto companies, but it's just like blowing up much more quickly because there's no lender of last resort. There are no kind of government programs to kind of step in and backstop, when a company is fractionally reserved. And so, I think it's, this is probably the final boss of late stage fiat.
Yeah. But one of the very early interviews I did, probably my first 50 interviews, certainly first year of the podcast, somebody said to me about the crypto funds. Mm-hmm. It's Jill Gunther. I think she got married, so maybe her name changed. But she said the interesting thing about these token-based companies is they're essentially getting to do their seed round and IPO all at once.
Yeah, exactly.
And so some of these ideas originally, whether it was EOS or who the ones that sponsor Man U? Tezos. These things are raising hundreds of millions as their seed stage, but because they have the token, it's kind of like an IPO because the token is like a pseudo share. But they're doing that on a white paper, an idea without ever having proven product market fit.
Sure,
like insanity.
Yeah. Well, that's what I was saying about you see why that's so appealing to a traditional kind of a more traditional venture fund, or vulture fund, I guess. If you've been locked into kind of waiting 5, 7, 10 years for your exits, and now you have a mechanism to get exit liquidity, meaningful exit liquidity, right, in like 6 months. You almost like you can benefit from like the liquidity of like a hedge fund while having like venture fund kind of insider allocations, right? And so you can see why that's appealing. It's just not like durable or sustainable. And a lot of people like it's a game of musical chairs, and very few people like will succeed, and most will get totally blown up. And that's what happened.
Well, I think you destroy the hunger. If Bitcoin, I love doing this podcast, right? But if Bitcoin does 100x from here, I definitely want to spend more time with my family and at home.
Sure.
Less incentive to travel the world. So if you're a hungry upstart and you want to create a business, it's good to have a seed fund. It's good to have a Series A. It's good to kind of have that goal and that objective that you don't really get the payout until you've proven your product market fit. Yet I can see even the incentive would go for the people building. It's like, I've got a shitload of tokens here. I'm instantly a millionaire, decamillionaire, whatever, worth 9 figures. Mm-hmm. What incentive have I got up to get it every day and go, let's work on this product, let's make it work? Like the incentives are all screwed. So it kind of becomes immoral.
Totally. Yeah, completely agree. And yeah, I mean, it's you mentioned just, the late stage fiat final boss, like it's ultimately a symptom of like the reason there's all this like capital there, not anymore, but there was all this capital like sloshing around to invest in these massive amounts in these kind of white paper, like idea on a napkin concepts is like the Fed has spent the last, really 50 years, but especially the last 15 years, just, with zero interest rate policy, pushing yields down and down, and pushing people further out on the risk curve and having more and more liquidity like sloshing around. So people can, where previously, we moved from being able to, just save in a bank account and maybe have some speculative investments in like stocks and bonds. And then increasingly you have to have more and more of an allocation to stocks and bonds to outpace inflation. And then finally, like those are yielding essentially zero or very little. The valuations on stocks get super high. The yields on bonds get super low. Okay, well now we need to allocate to the private markets. And a lot of this capital is going into these big institutional allocators that have to find a way to like chase yield and keep up with their return mandates and keep up with inflation. And so you just get pushed further and further out on the risk curve. And like the final, like most absurd manifestation of that is let's invest, hundreds of millions of dollars into a guy's white paper and we can, cash out in 6 months without ever generating any kind of real economic value on an underlying basis.
I do wonder how people feel after that. If you've managed to become a multi-millionaire without creating a product, that money's come from someone else.
By dumping on retail.
Yeah, and by dumping on retail. Like somebody's made a loss for you to become that millionaire. I wonder if I've got to stop doing that. I wonder if that eats your soul in any way.
It must do. So it is completely immoral, like you said.
Yeah, no, totally. And that's one of like many reasons to like focus on Bitcoin like we do, right? Like whether, I think we have made a lot of investments I expect to be successful, but whether they're successful or not, they won't live and die on just dumping on people who don't know any better. And you don't have to, when Terra Luna blew up, if you went through like the subreddit that was dedicated to that ecosystem, like it's just full of people basically saying like, I lost my life savings on this, or I lost a huge amount. And even if like, let's say Do Kwon was perfectly like well-intentioned, like being, part of something that even has the potential to destroy people like that is, not something I want to be involved in. And so, whether our investments succeed or fail, they won't fail on a basis of, they won't succeed on a basis of blowing everyone around us up, right?
Well, I think he genuinely thought he'd created something.
Yeah.
I do. I think he missed the signals and the signs where people are telling him like this is flawed, this can unwind. But I don't think he set out to defraud people. I don't know if you think differently.
I don't know enough about him or...
It sounded sketchy. I remember I was with Pomp at one point. He was explaining to me, I was like, this sounds sketchy, but there are the people who have literally created pump and dumps.
Yeah.
Like also, some of them are highly respected VCs, or traditionally respected Silicon Valley VCs. I mean, I even think people like Sequoia, everything happened with FTX. I mean, they've kind of got away with it, but they're exposed on that badly.
Yeah. No, it's a huge black eye for them.
Do those black eyes remain?
We'll see. Time will tell. It's not like Sequoia is necessarily existentially threatened by that. No. They'll keep trucking, they'll keep raising, and we'll have to see how it hits the reputation over the next 5 years.
Well, Bitcoin's eating the world. 1031's maybe going to eat up these other traditional hedge funds.
That's the goal. Yeah.
Okay, let's get into your article. You wrote this article, Bitcoin's eating the world, famous, follows on from a famous quote, the software's eating the world. Yep. What was the background? Why did you want to write this specifically? What realization did you come to?
Yeah, it's really a thesis statement that I came to really like 4 years ago when I first kind of got into Bitcoin, but especially a couple of years ago when I started making contact with the 1031 guys, was just that if what we believe about Bitcoin ends up being true, and that it is the best money, then it will inexorably achieve adoption in some form or fashion. We can talk about what that ultimately looks like, but it should achieve essentially worldwide adoption. I think most Bitcoiners can understand that and generally agree with that in some way. And I even think a lot of capital allocators can kind of understand that logic. They may not agree necessarily that Bitcoin is the best money. They may have questions about, well, why is it Bitcoin and not something else? But they can kind of get on board with like something being broken in the traditional fiat system and there needing to be some kind of solution. But then a lot of people, both Bitcoiners and not, don't take the next step to saying like, if that's true, like let's just assign some probability to it and say that that's true. There are meaningful derivative implications for companies that are providing products and services that will enable that growth of Bitcoin adoption. If there are 8 billion people ultimately using Bitcoin in some way, there will necessarily be massive industries built up around enabling that. And then existing industries themselves will also have to meaningfully adapt to that reality.
Adapt or die.
Yeah, exactly. Because money is, half of every transaction. Every economic interaction at virtually any scale is downstream of money and needs to leverage money in some way. And if Bitcoin becomes the global reserve currency and essentially, the apex predator of money that we expect it to be, existing industries that currently have nothing to do with Bitcoin will have to reckon with that reality and adopt tools and services to utilize it, and also probably see various elements of their businesses transformed by that fact. So basically what I was kind of getting at was I think there's a tendency, even among Bitcoiners, to look at Bitcoin companies as kind of like a cottage industry. It's kind of like, a cute little set of like, investments here, investments there. There's like, this lightning companies, they're kind of cool. They're doing something. And like this financial services company, like I like them, I use them, whatever. But I don't think people like fully understand that like if we're right about what Bitcoin is going to be, then it's going to be far from Bitcoin companies will be far from a cottage industry. It'll be basically every company, right? So the surface area of kind of what's investable as a Bitcoin infrastructure investor just gets bigger and bigger every year. We expand out in these concentric circles from like financial services and payments, kind of the logical stuff, to like oil and gas, as it leverages kind of Bitcoin mining, to consumer applications. We're seeing that maybe with like Primal, with Fold, some other companies in our portfolio that don't actually have anything to do with Bitcoin or didn't initially, and came to us because they kind of saw an opportunity to integrate it in some way. And so you just kind of, I think we'll see a lot more of those as we go, as Bitcoin adoption increases. And so just kind of waking people up to that reality, both like capital allocators that we talk to, but also just anyone who's interested in Bitcoin in general. Like there's a whole set of derivative implications that you should be paying attention to if you think Bitcoin is going to become, what we think it can be.
So I'm there now. I think it will. But I always had some doubts. I was like, but really, can we get there? Because when you explain it, when you rationally think it through, a decentralized form of money, which we've never had before, invented by an anonymous guy, that is operated and managed by a set of these nodes that exist around the world, and we have these like little mining operations or these massive mining farms. It can be a container in the jungle in Brazil. It can be a massive rack in, say, Texas, kind of cheerleaded by a bunch of kind of degenerate outcasts. When you rationally think it through, you're like, yeah, but it's not really going to do this. Like in your head, I had some doubts earlier on, but now I'm fully in. I mean, Danny beat me to it. Danny was more bullish ahead of me. But I'm fully convinced now. Mm-hmm. Like, I'm there. You are, aren't you?
100%.
But why? Why is it? Like, why is it happening? Why will this happen?
Yeah, I think it comes down to Bitcoin being superior money. And I don't think that it's possible to insulate yourself from the consequences of what that means if you're a self-interested economic actor. It's, I kind of in the piece, walk through just like a summary table of all of the, characteristics that make Bitcoin superior money on pretty much any dimension you can think of. It is. We have a thesis. I think anyone who holds Bitcoin has this thesis in some way. We certainly have it at 1031 that ultimately all monetary goods will converge to one, because everyone has to constantly face an A/B test of, do I want to hold Bitcoin or something else? And if in every iteration of that A/B test, Bitcoin wins out, you won't want to hold 3 other monies or 5 other monies or 10 other monies that are inferior. You'll want to just hold Bitcoin. You'll want to just hold cash balances in Bitcoin. And you can do that permissionlessly. You can do that fairly cheaply. You can access it from anywhere in the world. Obviously, there are frictions in different countries and different jurisdictions that we can get into, but the long-term result is kind of unavoidable if we're right about Bitcoin being the superior money that it is. And I think you've seen historical examples of that play out across history. Bitcoin Standard, Safety goes through those in great detail. But I just think it's very difficult to envision a world where Bitcoin continues to do what it has done and continues to maintain all the characteristics that it has had, and doesn't just achieve more and more adoption in a one-way function year over year. Once you start adopting it, you don't go back. You can see that in the HODL waves, right? You can see everyone who is adopting it, like, anecdotally knows that's the case. We can see it to some extent on on-chain data. And
love the HODL wave.
Yeah, absolutely. It's key analysis.
I've seen why it wins in a live environment in the fiat world. Where I was out in Lebanon a few months ago making a film.
Yep.
And in Lebanon, it's essentially a failed state, and the Lebanese local currency, the lira, I think it is, or is it Lebanese pound? I can't remember. I think it's the lira. Is a shitcoin. It just constantly devalues. Similar in Argentina with the peso, right? But what happens in Lebanon is everyone accepts the dollar.
Right.
But they don't have coins. Okay, so they only have the note dollars. And so they give you your change, your coin change, in the Lebanese lira. And so what happens is when anyone goes to pay, they get out their 2 wads of notes, which is dollars and big wad of the Lebanese lira, and they start paying with that first, and then they make up the difference with the dollar because they know it's a shit coin. Get rid of the lira and hold on to the top. Is it the lira?
I don't know.
Yeah.
It's so inefficient, though, that system.
Yeah, but it's proven to you. It's that what do they call it?
Gresham's law.
Yeah, Gresham's law. Like
Lebanese pound.
Yeah, Lebanese pound. That you get rid of the worst money first.
Right.
Yeah, and so I've seen that, and then you experience it in your own life. Me and Danny were always like playing Bitcoin games. It was like, I'm not going to tell them all, but like, how do I not spend my Bitcoin? Right. If I do this, I can either short the pound, the dollar, the Australian dollar, but we're always trying to do that. You come to that realization, I've got to own this shit. It takes people a long time to get to that point. It's a real test of you.
Mm-hmm. Yeah, I think that's fair.
What do we got here, Danny?
This was just the HODL waves you were talking about.
It's getting tighter.
Yeah. No, I think it's right. It's not something that happens overnight. It is a paradigm shift. It is, I think, a point I make in the article here is like, it's also not super intuitive. Like when you first come to it, and that's a lot of the reason that people say you need like multiple touch points with Bitcoin before you take it seriously and want to start adopting it. But that is also the fact that it's not necessarily at a protocol level, at like the barest level, the most intuitive thing is also like an argument for, not an argument against its quality as money, but an argument for the products and services and companies and applications that can be built up and will be built up to make it more intuitive. I reference in this article I make a lot of parallels to the internet. There's the famous Today Show clip, which is now like hilarious today, right? Of Katie Couric and the other host of the Today Show in like 1994, asking their producer like, "What is internet?" Not like what is the internet, asking what the @ symbol is, right? And it was completely foreign to like fairly like mainstream, well-educated, wealthy people at the pinnacle of Western society, sitting in a studio in Manhattan, right? And you could look at that and say, well, obviously, like this thing is like hyper unintuitive. Who's ever going to use this? It seems like it's just for criminals. Like I don't like even get the mechanics behind it. Like why would I want it? And then like less than 15 years later, everyone's walking around with one of these, right? There's the classic quote that we overestimate technology's potential in the short term and underestimate in the long term. It's a bit of a cliche, but like it's proven exactly right with the internet, and I think that'll be the case with Bitcoin too.
Have you, because there's other things that are being said publicly now that will be the similar video at the time. Have you seen the Jamie Dimon?
Which one?
The one this week.
Yes, I have.
Yeah, where he was saying it's for sex traffickers and frauds and anti-money launderers. Satoshi will come back and inflate the coins. The guy's actually arguing back. Have you seen it?
I've not actually watched it. I've seen the clip go around Twitter.
You should watch this. I mean, it's a couple of minutes long.
He's just like speed running classic FUD, right? Just like going through each one like very quickly over the last.
Do you want to play it now?
Yeah, play it now because I think it's one of those videos.
What we're talking about, we pretty much always have some crypto conversation with you. I'm just curious because I don't think we've talked to you since.
I think all that's been a waste of time, and why you guys waste any breath on it is totally beyond me.
Because you just think the whole thing just is
going to zero.
Going to zero and it's fake.
Bitcoin itself is a hyped up fraud. It's a pet rock.
You're back to that?
Yeah,
really?
Of course, yeah.
So what do you make then of BlackRock and other firms that are investing in infrastructure?
No, that's different. Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to we've used it to move money.
Right.
So that is a ledger. That's a technology ledger type of thing that we think will be deployable. Remember, we've been talking about that for 12 years too, and very little's been done.
There's some tokens that I agree with you on, but Bitcoin's based on a distributed ledger. Yeah, but it has all the characteristics of a store of value. It's immutable. It's scarce.
Who's that guy?
He's good though.
Totally untrue. It's
21 million.
Well, yeah, really. How do you know it's going to stop at 21 million?
Because
I've mentioned this to people
Satoshi,
too. Everyone says that. Well, maybe it's going to get to 21 million, and Satoshi's picture is going to come up and laugh at you all and say, no.
But there isn't a picture.
And by then,
I'm just
Satoshi
impressed at the argument. Like at least he's pushing back to
the
reasonable argument.
The failure of FTX and all of that. You've seen lots of failures over the years, different things that have happened on Wall Street and the world of finance.
I'm not surprised at all.
And
I called it a decentralized Ponzi scheme. The hype around this thing has been extraordinary.
The underlying asset.
But you have a lot of clients who are involved.
You guys you've all seen the analysis on Tether and the analysis on all these things and the lack of disclosures, and it's outrageous. The regulators should have stopped this a long time ago. People have lost billions of dollars. Some are, if you look at it as lower income people, in some cases,
Jamie, there's a difference between saying FTX is a decentralized Ponzi scheme and saying that
he'll probably be wrong on those rates as well.
Is a Ponzi scheme. That's like, Madoff created options.
Crypto itself that doesn't do anything is a pet rock. You're happy to
Bitcoin.
You can own it all you want.
I'm just talking. There's a lot. It's billions of dollars.
I don't care about Bitcoin, so we should drop the subject.
All right. Well, let me ask.
Because he said in the other one, he said, I don't want to talk about this shit anymore. Literally said shit, yeah.
Diamond hands.
yeah, diamond hands, yeah. But I think, okay, let's level. Either he knows, and he knows the impact this is going to have on his business, and he's scared about that, or he genuinely believes it, or Elizabeth Warren has said, come on side. But either way, he's lining up to look stupid. We're going to, Peter Schiff, we're going to come back in 5 years, do the same again, 10 years, and he's going to look terrible.
Yeah. Well, the capitulation from people like him is already starting in mass, right? I mean, we saw it last week with the ETF approvals. That's a topic that's been probably over discussed at this point. But I think what's notable about it is that, Larry Fink could have gone out and had a Bitcoin ETF and at the same time said, I don't really believe in this. A lot of people want it. I'm not going to tell any clients to actually put money into it. We're doing it basically because we have to. We're a market institution, so we cater to what people ask us for. But personally, I'm not interested in it. He completely flipped the script from a few years ago, calling it an index of money laundering, to going now on CNBC, Fox Business, etc., and hyping it up and promoting Bitcoin.
Bitcoin is hope.
Bitcoin is hope. Bitcoin is an asset that protects you from debasement of fiat currencies. He suddenly sounds like Ron Paul.
He's a pleb.
Yeah, exactly. And that's, one of the most powerful, asset managers in the world, the head of one of the most powerful asset managers in the world, someone who's like on par with Jamie Dimon in terms of influence. And suddenly now he's not on board. He's not on the same talk track, and neither is Fidelity, neither is Franklin Templeton and all the other, major institutions that have gotten on board and are marketing these things like crazy now. And,
Not Vanguard.
Right. Yeah, not yet.
Not yet. Yeah, not yet. I wonder how many customers they've lost. Whether it's like a statistically significant amount.
Yeah.
Probably not.
Probably not at this point, but at a certain point, it will, I think, become apparent that it's cutting off your nose to spite your face. That's why I say, like, if you're an economically self-interested actor, eventually you capitulate because you can't deny Bitcoin's properties and you can't deny where it's going. I think every stress test, and I make this point in the article, that Bitcoin has endured over the last 15 years is more than any other traditional like investment that I can think of has ever had to endure by like orders of magnitude, right? We've had, at this point, 4 80% plus drawdowns, all followed by new highs. I mean, we'll see where the current one goes, but I'm bullish on making a new high yet again. We've had multiple bans from sovereign nations like China, massive rug pulls, exchange failures. You would think that if this thing was a hyped up fraud, as Jamie Dimon says, that it would have died by now. But the fact that it just won't die, even after the spectacular blow up of FTX in late 22, when I think a lot of people finally thought like, okay, this is it. Now it's done. The fact that it has ripped off a 3x move from there is, I think, has driven and will continue to drive a massive amount of capitulation among traditional finance participants.
It's a cockroach.
Yeah, absolutely.
Yeah, I mean, look, I find the whole thing fascinating. When you had to quit your Tradfi job,
I did. Yeah,
you had to go and see your boss.
Yeah,
did you tell him what you were going to do?
I did. Yeah.
What did he say?
He knew about my interest.
Okay.
So I mean, I don't know that he was or is quite as bullish as I am, but I don't think it was a total shock.
What about any of your old colleagues? Were they like, what the fuck are you doing?
Yeah, it's interesting. Like most of my colleagues that I worked with closely were probably like millennials or under. So
they got it then.
They got it more than you would expect. For sure. Definitely, people who were older than me were certainly giving me some odd looks. But I do think, whenever I would sit down and explain it to someone, not just what I was planning to do, but kind of why. If someone, who's like reasonably intelligent and well-intentioned takes like 5 minutes to listen to the bullish case for Bitcoin, they rarely come away thinking like that's idiotic. They might say, well, I still don't really get it. They might say like, well, I still have some questions or some FUD I need to bust, right? But very few people come away from that conversation totally disinterested and just thinking that it's a Ponzi or a fraud.
Have you orange pilled your parents?
Working on it.
Yeah, that's an active one. I think we're all active in that area. Yeah. Okay, so let's get into this, because you believe the total addressable market for Bitcoin is ridiculously high.
Yeah. I mean, I think it's essentially, a piece of every industry in the world. That's one of the things that's so unique about what we're the investable market that we're addressing is because money is half of every transaction, because all economic activity is dependent on it and downstream from it. Every economic interaction has to leverage monetary technology in some way. And so it's, rivaled Bitcoin's ultimate Bitcoin infrastructure's ultimate TAM is rivaled only by the internet and internet infrastructure. But you can theoretically still do a lot of kind of commerce without necessarily leveraging the internet. You will probably be like behind your peers who are using it. And it's, it gets less and less common as, cash gets, say, like less and less used. But you can still, in principle, imagine a lot of economic interactions that don't really benefit from or directly like leverage the internet meaningfully. And there's still a fairly large cash-based economy, around the world. But you can't imagine in principle any economic interaction that does not involve money other than, below the Dunbar number, maybe like some barter societies or some, small barter interactions,
Contra
right?
deals.
Yeah. Well, yeah, exactly.
Yeah.
So because of that, every industry will be impacted by Bitcoin in some way. And I think to drill into that a little more deeply, even if it's just payments, the legacy finance system that we have right now is based on this Rube Goldberg machine of credit obligations and passing them, along different counterparties and different middlemen, all of whom are taking their cut to make sure that to manage the risk associated with an IOU ultimately not coming through. when you can instantly settle borderless bearer value digitally anywhere around the world 24/7, get paid and settled instantly for resources that are instantly consumed, that's a totally different paradigm for economic interaction than anything that we've had over the entire history of humanity. That wasn't true of gold. It's not true now. With gold, you could exchange bearer value, but to scale it, we had to introduce IOUs. We had to introduce essentially fractional reserve, and that came with its own issues that ultimately gave birth to fiat central banking. And now we live in essentially an entirely credit-based transaction system. So we've never really seen before true instant transmission of instantly settled bearer value. That's totally new, and that will be the dominant apex predator way of transacting ultimately. So every business, every economic interaction is going to have to respond to that in some way. And that's really just like the first layer of the types of infrastructure and the types of services that will have to kind of be built to manage that shift in payment paradigms.
It's really interesting because there are so many people, companies, institutions in the world who have no idea what's coming. Like if you're right or we're right about this, they fundamentally cannot see this paradigm shift that's coming. Because if you could, you'd be prepared for it. Like I see it come in. So every business I have is prepared for this. It has a Bitcoin treasury strategy. It has a Bitcoin acceptance strategy. It has a de-risking strategy, and I'm prepared for it, but also massively prepared for the upside. I've done it personally. You've done it personally. You've done it personally. Like we see it, but most of the world is sleepwalking away from this paradigm or ignoring this paradigm because I think it's such a huge leap to go from I see Bitcoin, I'm aware of it, to I'm now interested in like owning it and finding more about it, to like, holy fuck, this changes everything.
Right.
And that leap from just hearing about it, holy fuck, this changes everything is huge.
Yeah. I think an underlying issue too is people don't, and I certainly didn't before I got into Bitcoin, people don't really know how transactions work. They don't know how payments work. They don't know how their money works. They don't know how banks work. They're generally not incentivized to know, and it's cumbersome and irritating to have to even think about it. And to our point earlier on Keynesianism, a lot of what people are taught, if they even care to kind of go look at any of this, is essentially just material that's been retroactively engineered to justify everything about the system and basically make it seem normal and fine and like it has no problems. And so that I think is one of the things that contributes to kind of the blindness and kind of the sleepwalking is there's both a lack of understanding of what we do when we make payments, what we do when we save money, whether that's in bank deposits or invest or saving in the S&P 500, right? There's a lack of understanding there, and there's also kind of a lack of appetite to think about it, which is why I make the point in the article that I think for most people, the realization and the need to shift to a Bitcoin standard or to leverage Bitcoin in some way will be an instinctive realization. It won't be like an academic one. People won't be sitting down and kind of analyzing these things that we're talking about right now. They'll do it out of kind of base economic, self-motivated reasons to preserve wealth or to move to something where their payments can't be censored or where they're no longer where their value isn't being extracted to the same degree via middlemen, or they're just adopting something that works better for their business, which is, I think, ultimately like where we want to be, right? We don't want to have to like give everyone the Bitcoin standard to kind of drive Bitcoin adoption. Like ultimately, the companies that we invest in at 1031 are an example of service providers that will need to come in and abstract away a lot of the underlying mechanisms and give people just a fundamentally better experience, like a cheaper experience, a faster experience, and an experience that they can just easily, intuitively understand. Ultimately, Bitcoin needs to, in Steve Jobs' words, it needs to just work, right? He had this obsession with just like the technology needs to just work. I think we're definitely heading there in just the last few years. Some of the companies that we've invested in and, some of the tools that we use that I'm sure you guys use too, a lot of people listening use, have improved dramatically. And I think a lot more of that's coming over the next 10 years. And so I think the people who are ultimately instinctively motivated to start using Bitcoin will the flood of those people will come when the motivation gets too strong and the frictions get so low that why would you use anything else?
So how early are we?
We're so early.
We're so early.
We're so early, TM. Yeah, I think you can kind of see in a chart I put together in the article, just comparing like Bitcoin's adoption to the internet's adoption. It's very difficult to gauge either of those things like really well. They're all like kind of swags and estimates and pulled together and interpolated based on a variety of different sources, but if we say that the 0 point for inception of the internet is like 1983, which is kind of like the start of TCP/IP. Okay, so we're in like the mid to late 90s now, right? Which I think like tracks roughly with any of our experience. Like
Still
I remember
on dial-up internet.
We're on dial-up, yeah.
I remember that. You
yeah.
How old are you? Can you say? Touch yourself?
Like early 30s. Let's call
early
it.
30s.
Yeah.
Oh, but hold on. I'm mid 40s. You must have been like very young.
Yeah, I was. But I mean, my parents were like fairly early adopters of PC and the internet because I told you they were CNBC addicts. So they did a little like day trading and, they, wanted to kind of be involved in the market in that way. So I remember the noises, right? The hilarious like robots arguing with each other noises, right? And I remember pages that took 5 minutes to load. But
do you remember a world of no internet?
I do not.
See, that's mad. Yeah. Do you?
No, I don't. I remember dial-up, but I don't remember no internet.
So I remember no internet.
Yeah.
Like the first, I was born in 78. We didn't have the internet in the 80s. The first time, I was 14, the first time I used the internet. Our school got it, so that would have been about 92. And it was just slightly on the news. And our school had Archimedes computers. Anyone knows what they are?
Never even heard of that.
Fucking bunch of shit. And we all got one computer had it in the computer room, and we all got 5 minutes to have a play with it and doing it. And I remember I was on Yahoo, and I did my first search, and I searched because I was into heavy metal. I searched for Korn, the band Korn, and it came up with the band and a bit of information. And I remember thinking, that's pretty cool. We got it at home. I must have been about 16 when we got it at home, and it was crap and slow. And then when I got to uni, so I was about 18. So when would that be? Like 96? I first started to use it properly because of a way to email people or connect with people or, research stuff. But it was still 56K dial-up. The odd ISDN line was coming in. Yeah.
So I'd have been like 5 or 6 then.
Yeah. So it is a funny thing. And my kids don't even know a world of no mobile phones.
Right.
They don't remember any of this. Like they don't have, because there was a shift in the world. I've talked about this before. That when you used to go and meet somebody, it's like, I'll meet you at the cinema at 2, or I'll meet you outside like a shop like W.H. Smith's at 2. You had to be there at 2 or 5 minutes before or after, because there was no way of getting hold of somebody. And so, like everyone's now is like, I'm going to be 15 minutes late, WhatsApp or whatever.
See, I definitely do remember a world before mobile phones, but not like when I was going out and meeting people. By the time I was, I think 12, I got first, like a Nokia 3310 or whatever. So I never had to deal with that world.
3310, that's a classic. I had a StarTech. Mine was the Motorola StarTech. Yeah. But yeah, so it shifted the world fundamentally, is that you could constantly communicate with everyone. But that it's interesting how aligned those are.
Yeah. Well, I remember in the late 90s, I got a catalog of Legos, and there was like a Lego set that I wanted.
Which was it? Do you remember which one?
It was like a train set, like a Lego train of some kind. And I told my mom, like, I wanted it, I guess, for my birthday, and she was like, okay, well, we'll go order it. And so I like picked up the phone to dial the number like on the catalog, and she was like, no, we'll use the internet to do it. And I went over to the computer with her, and she showed me, getting onto the website or whatever, and it took a couple like minutes to load the page and then to enter the data, and I'm sure we had to like refresh it a few times to get it to actually work. And finally we got it to go through. And I remember thinking as a kid, like, okay, well, why don't we just call them, right? Like, what the number's right there on the cover of the catalog. Why can't we just call them? But then a couple years later, it was like, what's a catalog? Like, we'll just go on Amazon, right? And those shifts can happen like very, very quickly.
Well, it killed the Yellow Pages.
Yes.
The Yellow Pages was a thing that every year you get delivered to your house. It's a big, thick yellow thing. Then it got thinner and thinner, because obviously people were pulling their ads, like, why am I going to be in here? And then it's gone.
Right.
And I wonder what their website's like. I wonder if they died. Because, what they should have done is gone, if they'd have known, they could have been Yahoo.
Yeah.
A listing.
Right.
They still a thing?
I mean, it's still a thing, but it's junk.
Yeah. What the hell is it?
It's the same thing, like just a registry for business.
It looks like a website from the 90s.
Yeah.
Zeros. The reason I say it is Bitcoin predates my daughter.
Mm-hmm.
But she will remember a time of Bitcoin not being a thing, right? Because kind of my kids' will never know a world of not having Bitcoin. It might be the only thing they use. And that's going to have, I don't know what that generational shift will be, the equivalent of you had to turn up on time, because you didn't have, so I don't know what that generational shift will be, but there will be a shift.
Yeah, absolutely. And I think it's also important to remember, like, we all grew up, I mean, every person at this table and probably most everyone listening grew up on a pure fiat standard.
Yep.
And so, that's water to us. Like, we're swimming around in it. It seems like just the natural way that things are, even if it has problems. But like, that's very new in human history. Like, it started in 1971, right? And so we're, I think we all agree we're probably at the tail end of that experiment, but it is an experiment. It's not, the natural course of kind of human events, like this thing that has been around for like millennia that is, can't possibly be changed. Like, our grandparents remember a time when that was not the case at all, right? So when we think about paradigm shifts that can happen and, change big systemic macro backdrops like that, I think it's important to remember, like, that isn't that that fiat money isn't that well established. Like, it's not that old in terms of like, so when you think about how difficult it is to displace, the dollar has massive network effects and will continue for probably some time. But it's not like a law of physics, right? Like, all that's required is just growing distribution of knowledge over time and UX that's good enough to reduce the friction to a point where there's no reason not to just go ahead and use it.
Well, network effects and incentives, both are important.
Sure.
It is almost like fiat will be taught both in economics and history lessons.
Yeah.
By the way, there was this time we had this bullshit fiat system. So you as an investor then, how does this make you look at the kind of companies? What are the picks and shovels that you're looking at? Because you've taken a bunch of capital on, you're looking to return to investors. You want to outperform Bitcoin?
Yes.
So what is it you're looking for?
Yeah. When we bucket investments, it's generally kind of like at a high level financial services. So that can be custody, lending, Bitcoin-backed lending, any kind of asset management service that leverages Bitcoin, Lightning roughly, and like layer 2s generally, and we'll see how those develop. But right now, mostly focused on kind of payments technology, but increasingly there will be other applications there too. Mining infrastructure. So that's not really so much. We do have some kind of prop mining investments where a company is just actually a Bitcoin miner, but also a lot of investments that are in kind of the picks and shovels of like the infrastructure necessary for Bitcoin mining.
Hardware and software.
Hardware and software. Yep. And then there's kind of security infrastructure, which you'd think of as like any kind of hardware or software stack that allows you to actually use Bitcoin securely, privately. So, CoinKite we're invested in, and, hardware wallets, Node hardware and software, and then consumer applications broadly. So I mentioned, Fold, Primal, but it's basically, as you think of like that first tier of like picks and shovels, it's anything that makes Bitcoin easier to use or, introduces it to the traditional financial system, kind of bridges the traditional financial system to Bitcoin. And, like I said, if we're right about where Bitcoin's going, there's no way to think of a world where Bitcoin does what we think it can do, where companies like that don't also benefit dramatically from growing demand for their services, to allow people to actually use Bitcoin in better and more efficient ways. Yeah,
well, so I'm also really interested in this next phase of non-Bitcoin companies becoming Bitcoin companies, because there's like this. When you see it, it's very obvious. I'll use PubKey as an example. You've been to PubKey in New York?
I haven't yet, no.
But look, just as an example, there are plenty of bars in New York, plenty of successful bars. And PubKey in its own as a bar could be a great bar. You layer on Bitcoin and suddenly you've got a whole group of people in New York who go, oh, that's my bar.
Right.
And so that gives you, I don't know what the boost that is, 10%, 20%, 50%, but there's a whole group of people who or that will become their local. And then you layer on Bitcoin events, then they're specifically coming once a month to those events. Oh, and you've got merch, so you're selling that. So it's this layering on Bitcoin onto traditional. I mean, we have the same with our football club, right? Mm-hmm. If Bitcoin's dumping or people have lost interest, people still want to go to a football match and drink a beer and get a burger. You layer on Bitcoin, it just gives you that added group of customers and that added bit of business. There's hundreds of thousands of companies around the world who haven't even realized that.
Yeah, absolutely. I mean, like Primal is like a good example, right? Of a company that is monetizing content through Nostr zaps in a way that is unachievable via traditional fiat rails. Nostr isn't necessarily doesn't need to necessarily be directly linked to Bitcoin, other than just the overlap of kind of the user base right now. But that's right now it's primarily like a social media. Longer term, you could think of it as a communications protocol that can lead to a lot of different applications. But nothing about it necessarily like has to leverage Bitcoin. But combining Bitcoin with that supercharges like what it can be in a way that you couldn't do with the traditional financial system. And so I think that's what we'll see a lot of, whether it's like Bitcoin micropayments for monetizing content via things like Podcasting 2.0 or just new content platforms that emerge. That's, I think, where you'll see like the next concentric circle of companies that are started to do something not related to Bitcoin, not really catering to Bitcoiners, but that see that they can bring on a new angle of user engagement and retention through Bitcoin micropayments, and can hack growth that way.
So Fountain could disrupt Spotify.
Potentially, yeah.
What is its competitive advantage there?
So we're not invested in Fountain, but as it relates,
as an example company, yeah.
As it relates to any company that's trying to use Bitcoin to monetize content, like whether that's Fountain or any other, the first thing is you're bringing in a whole to your point on PubKey, you've got a whole set of embedded users that will show up right away just to be able to use Bitcoin.
Cheat code.
Exactly. You're bootstrapping kind of away from the cold start problem to you've got like a community that you can start leveraging. Eventually, you'll see, I think, a long tail of creators migrate to platforms like a Fountain, like a Primal, to better monetize content in a way that they couldn't on, say, like a YouTube or Spotify. We're not invested in Wavelake, but they're kind of also an example of providing a place for just a long tail of creators that have very little ability to get meaningfully paid on traditional platforms, but through direct audience engagement via whether it's Zaps or Sat streaming, they actually can. That's like very early days, but all it really takes, I think, for any of those platforms, any of those applications to kind of go parabolic is one or two big creators, one or two big artists to take interest and move content there and actually realize that the economics to them can be a lot more attractive there versus on traditional platforms, or even just additive, right? It doesn't necessarily have to be an either or, but if they can, have content on a platform and get directly paid without, a cut to an extractive middleman, and they avoid potential censorship of the content they want to make, or gating of the content that they want to make, then it's just additive to what they are doing on other traditional platforms. And so you really only need one or two of those to kind of open the floodgates, I think, on something like that.
Nice. How much do you think about treasury management as well? Because again, just as a business operator, I know that if I keep my treasury in Bitcoin over pounds, that my treasury is getting stronger and my competitors' treasury is getting weaker.
Yeah. Grant Gillum, our co-founder, wrote a piece on this recently that I think is good at addressing a lot of these questions. But, I think we frame it as like there are three different considerations for companies that are holding Bitcoin in the treasury. The first is just like you need to avoid an SVB type situation, right? There are a lot of companies, not just Bitcoin companies, but like general startups, around the world that were facing like an admitted like extinction level event when SVB blew up because their entire cash balances were in that bank, and if the government hadn't stepped in with BTFP, then a lot of those companies would have gone belly up overnight. So you need kind of that first layer of just a few months runway kept in Bitcoin just as a way to protect yourself from exogenous macro factors. So like that by itself is a superpower. Over the medium term, if you can DCA into Bitcoin responsibly, some percentage of whatever your runway is, and you can hold it for just 1 or 2 years potentially, depending on kind of when you get in. If you lump sum buy at 70K at the top, then maybe this dynamic won't help you as much. But if you can get some into Bitcoin over time, and then let's say Bitcoin rips off a 2x, a 3x, a 4x, well, now potentially you've given yourself another year of runway, or you've given yourself an ability to not dilute yourself as much as you might have otherwise in the next raise that you want to do. So that's kind of meaningful over the medium term. And then over the long term, like, yeah, if you can plow any amount of free cash flow back into Bitcoin, that's a superpower over like a 5 to 10 year period, and that'll accrue to your equity value of just holding this asset that's growing parabolically in purchasing power as a treasury asset. So really, like over the short term, the medium term, and the long term, it is a superpower. It has to be managed well enough that you don't put yourself in a position to actually shorten your runway at an inopportune time based on kind of just timing the market wrong. And so that's why DCAing is perhaps like the best strategy there. But it's something that we're encouraging all our companies to do, and we think it'll quite literally pay dividends over the next 10 years, both for them and for us.
Are we all bullish enough?
No one is bullish enough.
I mean, if I wanted to put money into 1031, or if I wanted to go to Ego Death, I'm sure if I could say, look, I want to put 250,000 in, can I? And they would hopefully take my check and say, yeah, you can become an LP. Does that make me an LP?
Yeah.
Yeah. I don't really understand funding.
Yeah,
I have that choice, right? But I'm not doing it. For some reason, I'm not coming to you guys and going, Grant, can I give you a check? Jeff, can I give you a check? Because in my head, I'm like, I've rationalized for me holding Bitcoin is guaranteed, and I'm comfortable with that. But if I thought, do you know what? Actually, I think I think my money in 1031 is going to outperform Bitcoin. Fuck yeah, I'd put a check in. But I'm not 100% convinced.
Is it the fact that you're not convinced it's going to outperform, or is it the fact that you add risk and reduce liquidity?
Not worried about liquidity. Do add risk, but I like a bit of risk. But so in my head, I'm like, okay, traditional investing, kind of rationalizing is like you invest in 10 companies, 8 fail, or maybe 7 fail, 1 kind of like breaks even, and you're looking for those 1 or 2 unicorns. And I don't know where the unicorns are. I can't envisage that right now. And that's maybe me short-sighted. I was short-sighted with the internet. I couldn't envisage the unicorns then. I worked as a developer in the internet. I had a web development business. I built websites for companies who took the risk and not built unicorns, but built successful online businesses. I couldn't see it. And I'm just not made that way. I'm creative. But if I was convinced that those 2 or 3, I don't know what your hope is on your kind of like the breakdown of your investments, but I'm like, okay, so if Bitcoin does a 10x over 10 years, just say that's a number, you need those companies to do what, maybe 1,000x to cover for the ones that fail and outperform. Maybe that's true. Now, how do they 1,000x? Well, they've got to bring in 10x more Bitcoin. Is it 100x more Bitcoin? See, I haven't even done the math, but there's a math to it, right? It's like, how much more Bitcoin do they have to bring in over that period to get to the valuation which outperforms Bitcoin? And I do not have the skill set to do that.
Yeah, no, I think it's all fair, and I think in a lot of ways,
sell me.
Yeah, no, I mean the instinct is correct to some extent that first of all, everyone should own Bitcoin.
Yes.
So just to be very clear, whether you're just a pleb or an institutional allocator, first of all, you should own Bitcoin. But beyond that, I think there are a couple things to consider and things to think about in the formula. And I'll say that while it's not something that we necessarily like promise or explicitly target, we're all Bitcoiners. And so we necessarily are doing this because we think we can get more sats doing this than doing something else, than like mining fiat in some job and just stacking it, right? And all our companies are thinking that way too.
But hold on, you as a fund are investing other people's capital with a management fee, right, and you own part of the equity.
Yep.
So that's not your money because that's other people's money that you're using to outperform.
Yes, I get my point is as it relates to like the economics that we have in the businesses that we're investing in. We think that over the next 10 years, by doing this, like implicitly, we are saying like that's the best way for us to get the most sats, right, based on our skill set, et cetera, versus like working fiat jobs and mining fiat there, stacking Bitcoin on that basis. We wouldn't be doing this as Bitcoiners if we didn't have that conviction.
But what's the rationale behind the conviction? Yeah. Is your belief that you're going to have across each fund 1, 2, 3 of what will become the Bitcoin unicorns? Yeah.
So essentially, yes. I think there are two ways to look at it. And as a disclaimer, I would say even if the funds didn't outperform Bitcoin exactly, if they performed like in line or even like a little worse than Bitcoin, that would still, if Bitcoin does what we think it's going to do, that would still make us like one of the best performing venture funds in the world. So it's kind of worth thinking about there just in general. But if we outperform Bitcoin, it'll be in potentially a couple different ways. The first would be pulling forward basically gains that Bitcoin will have over, let's say, a 10-year period via either acquisitions or companies going public. And the way that would happen is if, let's say, Bitcoin, does like a 5x over the next few years, it's viewed as that much more de-risked. The applications are getting more proven out. You'll have strategic acquirers who are kind of, blue chips that are maybe on the cutting edge of kind of thinking about where the world's going, looking at some of these companies and projecting out their cash flows and saying, I think Bitcoin is going to continue doing, 5x every 5 years or something, right? They'll bake that into the way that they forecast out, the company's cash flows, and they will be willing to pay an amount that reflects the discounted value of those cash flows over the next like 20 years. And maybe additionally, they'll think, when I buy this company, I'm the best owner of it. I can get synergies out of it. And so it can actually be worth more under my umbrella than independently, and so I can pay some multiple that could lead to an outperformance of Bitcoin over over a 5 or 10 year period, right? So maybe you get a company that you invest in at a certain level, and in 5 to 7 years, a strategic acquirer comes in and is willing to pay an amount that's like 20x what you paid or 50x what you paid, and Bitcoin in that period has only done a 10x. The reason they would be willing to do that is because they're looking forward 10 years, 20 years and saying, it's worth this to me, especially under my umbrella, with what I can do with the asset. So that's the first way that you could outperform Bitcoin is just a question of do you get strategic acquirers coming in, seeing where the space is going and pulling forward effectively some of the gains that they see Bitcoin ultimately having over the next 10 or 20 years.
Well, they might be survival acquisitions. Those who haven't transitioned into Bitcoin, yes, are like, holy shit, we need this.
Yes.
A bank.
Right.
Or an energy company.
Yeah.
Somebody is like, fuck.
We think there will be a lot of those. We think that if you're looking at the landscape, and you're seeing your business potentially getting disrupted, or even you're just realizing you're kind of behind the curve on what you could have done with technology like this had you looked at it 5 years ago, there will probably be a bit of a FOMO component, a desperation component to some businesses that will warrant higher multiples on some of the companies. And so the math is actually and it depends kind of the relative capital allocation across the portfolio, but the math is actually not that demanding. It depends kind of what you think Bitcoin can do, but if we have a few 100x's and a few 50x's and a few 20x's and the rest are zeros. Even in that case, you can construct a lot of scenarios where, you would outperform Bitcoin if Bitcoin only does say like a 10x over like a 7 to 10 year period. And the more bullish you are on Bitcoin's price, the more bullish you should be on, the multiples that we will ultimately get for our companies, because it's not like Bitcoin's price is like this exogenous force that has nothing to do with our companies over here. Like it would be a very suspect claim to say like, I'm investing in like general fintech, or I'm investing in med tech or whatever else, and I think I'll do better than Bitcoin. Like, you don't get any, leverage to Bitcoin going up. So if Bitcoin's going parabolic, none of these companies over here that you're investing in really benefit from that. If you're investing in Bitcoin companies, they all directly benefit from that in terms of adoption cycles, in terms of new users coming in when they see the price pumping, in terms of institutions paying more attention and maybe being more likely to be acquirers. As Bitcoin's price goes higher, people, perversely, like institutional allocators, get more and more likely to want to invest in Bitcoin because they're like, oh, it's less likely it's going to fail now. When it's at 250K, when it's at 500K, when it's at $1 million, even though your upside is probably much less than it would be today from investing in Bitcoin.
It's not going to zero.
It's not going to zero. It's at least going to stick around. And so I know now I have a much better line of sight to investing in companies that are building on Bitcoin, because this is going to stick around. The technology that they have built has durable staying power. And now I can invest, even though it would have been better to do it 10 years ago. If it will feel de-risked to a lot of acquirers or even the public markets if a company goes public, right? The other kind of dynamic, that's kind of how you outperform Bitcoin on like a fiat basis, where I'm getting like a 20x like dollar-based return, whereas Bitcoin only did say a 10x return in the same period. The other thing that I think is like even more interesting maybe to us is just the concept of Sats flows. So if Bitcoin does what we think it can do, and adoption only goes up and to the right, there are only 21 million Bitcoin. The only thing that can approach kind of the value of having a Bitcoin is having outsized equity in a Bitcoin producing machine, right? So these companies, you can kind of look at them as like any company that can produce positive Bitcoin cash flows regularly, you can look at that as kind of like a Bitcoin miner. So if I've got a 5% stake in some company that, because they were early and because they had the best technology and because they built up network effects and brand power, they have this really strong position now, like 5, 10, 20 years from now. And that allows them to just like mint Bitcoin every year. And I've got like a 5% stake in that. That should be, among the most valuable assets in the world, right? Just an ability to, especially as the block subsidy trends to zero, and it gets harder and harder to acquire, a share of the fixed 21 million Bitcoin as more and more people are demanding Bitcoin. Well, I'm sitting here with my equity that's just like throwing off Bitcoin denominated cash flows. And so you could see a situation where the math works out such that over a 10-year period, forget about the dollar price. I end up with, let's say if I invest X dollars today in a company, that means I'm giving up, X Bitcoin. Well, over the next 10 years, that could mean that I end up with like 2 to 3x the Bitcoin that I gave up to make that initial investment, depending on how well the company does and how well it scales. So that's why, a lot of our companies like are very hyper focused. This is what I was kind of referring to earlier. Like all these companies that we're investing in are like run by Bitcoiners that just like want more sats. So they're hyper focused on like scaling quickly. Like they don't necessarily want to just like grow for growth's sake and like burn cash. They want to get to a point where they're Sats flow machines. They want to be producing Bitcoin. And so even if you're not thinking about kind of fiat returns, you can still see a way to outperform Bitcoin insofar as like you're giving up some Bitcoin now to have a greater share of the fixed pie of Bitcoin over the next 10 to 20 years. That requires like investment judgment, investment selection, and good deal flow. I'm biased, but I think we have all those things, and I think we'll prove that out over the next decade. But that's how you kind of get there. That's the case for it.
Get the checkbook out, Daddy. We're going to be LPs. Okay. I mean, I'm going to save this for another day because I think I'm going to want you back on I do want you back on the show. A topic I'd be interested to get into is in a hyper Bitcoinized world, what happens to IPOs? What happens to the multiples of companies? I think it's an intriguing world. Yeah. I'll leave those ones with you. You got to think about those. We'll do this again next time we're up here in Nashville. All right. Okay. Do you want to tell people where to find you, where to find the article?
Yeah, the article is online on our website, 1031.vc /insights/TAM. Should be fairly easy to find. You can get it on TFTC as well. I am at John Arnold 1031 on Twitter. I don't tweet much, as I find Twitter to be kind of a DOS attack on my attention.
That is true.
So I try to stay off, but that's where I am.
John, listen, great to meet you. Thank you for this, and yeah, let's get you back on some of those points.
Yeah, sounds good.
All right, buddy.
Appreciate it.